John, we'll just start with the trade talks. Navarro is out there talking positively about them. He says, he says there's just going to be a lot of garbage coming out of the Wall Street Journal and the People's Daily and everything in between. But it was Larry Kudlow himself earlier this week who said, pretty pointedly, we have not seen those purchases yet, those agricultural purchases that were supposed to be a sign of goodwill in the trade talks. Our sign of goodwill was lightening up on Huawei a little bit. We've done that. Where's the move from China?
Well, one of the signs of goodwill is to actually get people in a room and talk to each other, and they haven't done that yet either. I hope Peter's right that we actually get Bob to Beijing to get the talks going again. But the fact is they still haven't done anything from before. And the truth is Huawei hasn't sold anything yet either from that agreement. So we're in the talking period in between. But there's a trade deal on the table. It's been on the table since February. It can happen anytime we want it to happen.
It's just going to sit on the table.
It's going to sit on the table. This issue is just too delicious to let it go in terms of a political issue. So you can have little tugs back and forth, but China as a headline item won't go away until the next election.
Would you both agree the only pressure point for the markets from this right now is if tariffs are expanded on the remaining $200 or $300 billion worth of goods? Because for the time being, we all kind of understand the status quo, Andres, but that, if it comes back into the picture, would seem to be a negative.
Yeah, I think it's contained at this point, and I think the market's learned to identify where it stands, where the discussion stands. I think that the leverage points are also becoming clear, which is the U.S. economy is actually holding up, and China's economy is not, right? The export data and import data show that things have deteriorated, which means they're going to have to do more stimulus, and they have the ability to do so. But going into those conversations, those are things that they're going to have on their notebook as they have those discussions.
And that leads us, John, into what the Fed will do later this month. They are basically positioning this as insurance against the U.S. slowing down.
Sure.
But ironically, the data is going somewhat the other way. The jobs report was strong. Jobless claims look fine. Even the inflation numbers have been somewhat firm, while it's been China where we're seeing the slowdown. So does that messaging make sense to you, or do you think there's an element of this that's actually responding to the fact there's not been more progress on the trade talks?
If we had a chart of the PMIs across the world, all of them are down.
Yep.
And so the world is slowing, and the U.S. is manufacturing is slowing along with it. That's not politically very popular of a thing to happen, too. So we need to see some more progress on the talks before anything happens. But the big issue inside China is two. One's the currency, and the other one is the credit restrictions. In May, Baoshan Bank was taken over by the regulators. It was taken over in a way that almost froze the interbank lending market and has now caused haircuts on bank paper being traded. The government, in addition to shoveling liquidity in, also essentially forced the brokerage firms to lend money to small banks. So there's a small bank credit crisis in China happening now. It was there before the trade talks. It's gotten worse, and the shadow banking industry dying is a big part of it.
The Journal even highlighted on the front page recently the story of a woman with a very successful e-commerce firm that has basically gone bankrupt now. So those problems are becoming more apparent.
Sure.
Andres, we are going to get earnings starting next week.
Yep.
The estimates overall for growth don't look that great. I'm wondering what we might hear about the dollar, especially as the president is now saying our dollar is too strong. Do you think companies might echo that, or what kind of information do you think is going to be most interesting for investors?
So on earnings, I think for the second quarter, the latest estimate is like negative 2% year over year for second quarter, and then looking forward to 2019 is roughly 3% year over year growth. So earnings don't look great, but as you well know, it's all about expectations, and I think expectations have come down significantly. And CEOs have gotten really good at publicly traded companies to lower the bar so much that all they have to do is be down 1% year over year to actually things look good.
And by the way, a lot of the commentary the last couple of quarters has been more negative than positive in terms of what the market's seizing on.
On the dollar, I think that is a really important observation, which is if the Fed does actually begin its easing cycle, I think that could be the beginning of this shift for the dollar from being basically in a bull market for the last 9 years to actually start to underperform versus other currencies.